In these difficult times of financial struggles and unpredictability, many of us are looking for opportunities for a better future. If you know the power of cryptocurrency, if you know the power of trading, then iCrypto101 is the future for your financial needs. iCrypto101 is in the process of creating the world's first hybrid cryptocurrency and foreign exchange. It is also an e-commerce platform where members can sell digital products such as trading education, payment gateways, and much more as the business grows for you to earn residual income for the long term. iCrypto101 is the first hybrid exchange platform that gives you the chance to make a residual income from rebates and digital products. If you're looking for an opportunity that can help you gain financial freedom, then visit iCrypto101.com. This is a platform with a revolutionary new innovation that will capture the entire trading world. iCrypto101. Imagine, implement, inspire.
So the question is, that 90%, why do they fail? They fail simply because the way they understand forex trading or trading is not how it is. They fail because the way they understand forex trading or trading, that is not how it is. How do they understand trading? One, some people think it gets rich quick scheme. I want to, or there's money there, there's $6.6 trillion there. So I'm just going to pick $1 million, then I'm rich. No, it does not work like that. Some people also defined the 90% are the impatient people that end up transferring money to the patient people, those who are patient enough. Now, forex trading is also about 10% buying, 10% selling, and 80% waiting. And that 80%, emotion alone will take about 70% of that 80%. Okay, so those are few things that I want you to understand. Now, if you are able to be consistent enough, you will become a type of trader that even if you are going to blow your account or lose your account, let's say you are trading with $100, there is a structure, a layout you are going to follow, and that layout will help you to trade for a very long time. And then even if the need arises that you are blowing your account or your account is going off or you are losing your money, you will have 100 reasons why that trade did not go well. So when you are coming back again, you are doing corrections on that 100 times. Then the next input you are making, you are going to start making money. Now, these are the hierarchies of forex trading. If let's say you are a trader, let's say you are starting fresh and probably you don't have a mentor, like nobody is mentoring you, like some of us, we started, okay, sorry. When you start first, your profit margin will probably be around 30%, 60%. Sorry, the losses will be 30%. The win, sorry, will be 30% or 40%, and your losses will be like 70% and 60%. You will grow from that level to a level where your earnings will be 50%, your losses will be 50%. At that point, you are now a break-even trader. Okay. From there, you're going to grow from your profit being 60%, your losses will be 40%. So your ratio is now increasing. From that point, you are going to 70-30. Once you are between a win ratio of 70% to 85%, you are a good trader. between 70% to 85%, you are a good trader. Last year, my ratio went up to 85%. I'm actually trying as much as possible to be in the 95%. Okay. Now, there are a lot of things that you have to go through manually to get to that level of 85, 90, 95%. At that point, you need a mentorship. You are following a step. At that time, you have scanned the forex market, and then you decide which asset you want to trade. So you become an expert in that asset. So let's say my favorite asset is gold USD, and maybe yours is CAD JPY, Canadian dollar trading against Japanese yen. So as you take that asset, you understand that asset, you know the movement, market condition, market nature, you understand patterns. Because you have studied it for a very long time, when it is buying, you are buying. When it is selling, you are selling. And you're going to make money from all those stuff. So that is for my introduction. And then let's kick the ball rolling. So as usual, I will come to my office, which is the education package on the ICX platform. That has been wonderful and helpful. So we have an ebook here for you to go through. Basic terminologies are there. I love 27 worst mistakes traders make. I have my own one that I'll add to ICS1 for you. Now, my content skills I'm giving out is from 3 sources or 4 sources plus my own extra research. So I am teaching you from 3, 4 experienced traders that I am following. Then my experience I'm getting myself daily basis as far as I'm looking at the charts. Then ICS content. So you will now have the opportunity that when you follow the instructions and you start trading, you might end up being in a 70-30 ratio without struggling with break-even 60-40 and stuff like that. So I want you to take time, get your pen and paper, your notepad, terminologies, things that you need to write down, you note them down, and let's continue. All right, so the books are there for you. Then we have short video courses that actually help you to know some basic information when it comes to technical analysis, a little bit introduction, the MetaTrader platform, trend, chart time frame, and all those stuff. All these are at your back office for you. Then we have crypto calendar. So for instance, as a crypto trader, as a forex trader, as a stock, bond, future trader, you need to have information on what is coming to control the day at each point. For example, today, there was a news reported by CoinMarketCap that the main developer for Dogecoin has stepped down. So what will happen to Dogecoin? If that particular information becomes an impactful stuff, Dogecoin will start dropping like water. Okay, so these are newses you have to look at. So you have to get that information for yourself. And we have that at the back office. And then I'll provide some other website that you can get such information as well. Then we have economic calendar, which is for currencies. Okay, so currently there is invading of Russia and Ukraine issue, which is really affecting the market, especially the US dollar as well, because USA is definitely supporting Ukraine against Russia. So it have effect on the US dollar the last week, and then some other information. So when you come to the back office, you'll be able to get all this information and know, okay, I'm an euro trader, what is actually happening and all those stuff. So if you want to be a successful trader, you must not run away from the economic calendar. Now, the next is the market news. Now, market news is all about sentiment, basic information that released, that triggered the effect of the market within, let's say, a period. So, for instance, California senator proposes legislation towards accepting cryptocurrency for payment. Oh, that would be a good news for crypto. But then that is a proposal. So we now have to follow this particular news and see the outcome of the proposal. Once the outcome goes in favor of crypto, you realize that the crypto market will be bullish. But when it goes the other way around, you see bearish and all those stuff like that. Now, the Ministry of Finance in Russia proposes digital currency bill. It's still crypto. Okay. England said to scrap COVID-19 restriction. Definitely going to affect the pounds as well. Definitely a lot of other transactions will start flowing, inflow of money and all that stuff coming. So all these are informations you have to follow. Now, let's say you don't really have an idea. Our back office is there for you to access that information once you are part of us. Then I will recommend other websites as well that you can get some of these news. And next is market research. Now, market research is all about what happened or informations about or reasons that affect each currency against the other and each detail. For instance, New Zealand dollar pushes above 0.67. What does it mean? Probably maybe it is below 0.67 for a very long time and now it breaks above. So this particular information now gives you the reason to see what could be happening. Now, there is already issue with US dollar because of this Russia-Ukraine issue. Probably it means that at that point, New Zealand dollar is not able to bullish against US dollar. So researchers will now go into it to really understand how this particular fundamental information is having effect on US dollar to the extent that New Zealand USD will be now bullish instead of bearish. So all this gives you that information. Euro drops on intensifying Russia-Ukraine conflict fears. Okay, technical outlook on performance of Clay USDT. So all these are informations you need to help you forecast the forex market or the trading market, including stock. So if you are a lover of iPhone, that means you have to focus on Apple and trade them. Don't just use the iPhone. If you are a lover of Facebook, don't just be on Facebook for Facebook to be making the money. For instance, last week, he was fined $90 million for over-spying the like buttons of people. So how would that news have impact on Facebook stock? If you have Facebook stock, probably you may go bearish. You make extra income for yourself. So those are the stuff we have at our back office. Then our signals. So our signals, 1 hour ago, we have Euro trading against Great British Pounds. This is actually will be a funny move. These two moving against each other at the same time. So it was a sell. Before then, it was a buy, and then you have a sell. And then gold had a sell for 1 hour ago. All these signals were given. So if you are not part of ICX, you join and enjoy all these signals and learn forex trading extremely for free. Learn forex trading extremely for free. We're just paying something small. Okay, there's an opportunity given you to help you gain this skills for yourself, so that you don't give your money to any company all in the name of you want profit, but you can decide how much you want to earn each and every single day from forex market. Remember, 6.6 trillion market. The crypto, we had a little drop where we are now climbing up back to our $2 trillion. So when you put together, this is a big market for you to make your money from. So I'm moving directly to my trading view. That's what I'm going to use today. for us to do some few new stuff as far as forex trading is concerned. Okay, so let's look at the crypto market. We are traders, so let's look at what is happening to crypto market. So crypto market has been a downtrend. Crypto market has been a downtrend. Then we are currently looking at $1.705 trillion. So what are we expecting in the market? I am expecting a bearish. Yesterday I analyzed. Yesterday we end bearish, and we expect another bearish until we get the necessary confirmation before we get a bullish move. So I'm expecting as low as 1.68 trillion for the crypto market. The whole crypto market cap should hit probably for creating a support, climbing to the resistance. Now, it means that there will be some break above, right? That's a little bit technical, but we all get there soon. Now, let's look at Bitcoin. Bitcoin had the same thing. Yesterday, I analyzed the bearish move. So we are expecting a push up, but I'm anticipating a level of 33,113. That's what I'm expecting BTC. Now, this is a weekly time frame. So the previous week ended with a bearish Mariposa, looking like a pin bar, and then a new bearish has started. So when you break it down to the daily time frame, all these are things we are coming to break into for you to know how to do technical analysis. So I have already put a resistance here, which was respected. And then market is trying to validate this place become a support, which is possible based on this move here as a level. But I still stand expecting Bitcoin should drop at least on the daily time frame. I'm expecting 29,555, so that I can also buy some and hold if you look at the 100,000 range. All right, so that is it for review on the crypto market. So if you are holding crypto, please, they'll be saying things like, oh, it is crashing, it's crashing. Don't worry, it's going to go well, and then we are going to hit the $3 trillion back as well. But this is an opportunity for some of us to analyze the market and get benefit of that and hold some and make some money from it. All right, so let's go back to Forex. I want someone to just type in the chat box an asset you want us to look at, and I'll use that asset to teach support and resistance, channel, and then levels. If there is time, we are going to look at time frames. We are going to define what time frame is. So when ICX gives you signal and they give you 30-minute time frame, what do you do? What do you expect to use the time frame for? Or what is the purpose of the time frame? Then if time permits me a layer, we are going to look at candlestick, right? Then once we are moving forward, we start setting up our trading accounts, and then other things will follow up. So if you can hear me, just drop an asset or a currency pair for us to look at, or I choose by myself. Okay, so if nobody is mentioning an asset, okay, gold USD. All right, so Mr. Steven, since you are going to be my friend, I'm a lover of gold. All right, so for gold, I've already have that chart running. Now, as a trader, what do you do? First, you must look at the long-term projection. Okay, so I will go as weekly time frame because I've already had some levels that price is expecting for me on the weekly time frame. All right, so let me zoom out quickly. What we are seeing here is a weekly time frame analysis. I've been milking this from September 21st, and then respected December 13th, 2021 as well till now. So this is the level I'm expecting a drop on the weekly time frame. Now the week has started with a bullish move with a little bit of retracement. And then when we look at this particular candle, we are seeing a Mariposa candlestick. Okay, when we come to candlestick, you're going to understand what Mariposa candlestick is. Okay. Now, anytime market is moving, it does not just go boom, 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 boom. Even if you are driving a car, you go first gear, you come back and continue the journey like that. There are points on ramps to come your way, you slow down and then move like that. That is how currencies also move and other stuffs follow. Now, when you look at the weekly time frame, you will now understand that, okay, this whole candle is green. It has been a bullish move. There's less rejection. Okay, so probably the new week is going to start with a buy-in. Now, you then now step down, come to the daily time frame. Okay, so you're back to the daily time frame. Now, these are people who want to probably go a layer, not to rely on signal services, or even if they want to rely on signal services, they want to backtest. They want to be able to backtest the signal just to be sure what they are going into, right? So on a daily time frame, I have a trend line here that was respected, tested. So I'll be expecting a bullish, all right? Then I'll come back to my 4-hour time frame. Okay, so let me zoom in a little. So on the 4-hour time frame, my trend line was respected. So the probability of expecting a bullish move was higher, and it has done that for me because price came back to respect the trend line multiple times. But don't forget, my resistance is 1913. So I'll be looking for a confirmation for a sell. And that sell, I'm expecting it to either respect this particular blue line. Now, that blue line was a resistance. Now, what is a resistance? A resistance is like a ceiling, and the support is like the floor. Now, when you bounce a ball, when you hit the ball on the ground, what happened? The probability is that it hits your ceiling. When it hits your ceiling, what next? Either it bounce back and then jump up again and bounce back and realize that the velocity becomes slow, and then the ball will be bouncing on the floor like that. These are the logic to explain support and resistance. Now, what if the momentum is higher and the ball breaks the ceiling? So the ball breaks the ceiling, what happens? So the probability is that after the ball breaks the ceiling, it either bounce on the ceiling and break the roof, and bounce on the roof and go up. Now, what if the roof is strong enough to reject the ball? Then it either come back to the ceiling or drop down to the floor. Now, if it gets to the ceiling, on top of the ceiling, and hits the roof, and then by the effort of coming back to the roof, the ceiling, it gets that momentum. It means that it can use that momentum to break the roof, which means that price has broken the resistance. What of the support? The same way, now let's use gravity. The gravity is higher, and let's say the ball have that energy to what? Break the ground and penetrate through the ground. Definitely it's going to do that same thing and keep going down, respecting it in that order. Let me just drill that quickly and explain that with drawing. Okay, so let me use different assets so that there's some. Let me use CAC JPY. Okay, so let me demonstrate now. So this is our floor. This is our roof. Sorry, ceiling. And then this is our roof. So let's assume you are standing here. You are standing here. And you throw the ball up. And the ball got rejected. The ball got rejected here. Where will it go? It either come to where you threw the ball from, which probably might not be possible, and come back here to the floor. When it gets to the floor, there are two things involved. It breaks the floor, hit back the floor, and keep going down. Or it keep bouncing on the floor like this. There is a reason for that. So at that point, the floor holds the ball. This whole area becomes the support. So we have support. You may screenshot for reference. Now, let's say as it's on the support became strong enough. The support became strong enough, and nobody knows it gets momentum. Okay, so that same ball now gets momentum because it's being rejected by the support. And it can bounce back. So let's say as it is bouncing back, it got to this level where you threw the ball from. So as it got to this level, now when you go back to physics, mechanics, and motion, as it gets back here, it can get the gravity tension to push down. So it may now push back here, and then finally get that momentum to break the ceiling. Now, as it broke the ceiling, we will say that it has broken a resistance because the ceiling is not able to reject it at this particular time. So let me use a yellow for it. So at this particular yellow circle, a resistance was broken. Now, what happens when a resistance is broken? In trading, one is termed as fake out and the other is termed as breakout. Now, when it terms as that, what do you do? When it is fake out, you will not see any confirmation or any validation. But when it's a breakout, you will see a validation. So when you are a breakout trader, then we expect the ball to come back to the ceiling. We expect the ball to come back to the ceiling. So let me now use the arrow. We expect the ball to come back to the ceiling. Then gain momentum and then find its way up like this. So as it is going up, where is it heading to? The probability that it's either heading to the roof, which is another resistance at the top. So either it got rejected or break it again. So the opposite of what we drew here, when you turn your phone upside down, the support becomes the resistance. And the resistance becomes support. So what do we now name here? This, let me give it another color. This particular place, sorry, this particular orange dot now turn to dynamic support or resistance. But because markets broke it and come back to test it, so now the term is test, which means that it has broken the place and come back to that same place before going up. So it tests it. So that is test. T-E-S-T. So this will become test. So it tests it. Now, as it tests it, should it come back to the same red line, then we now call it retest. Should it come back to the red line, then it means that it has retest. Now, these are terminologies you'll be hearing. Okay, so when I say retest, what does it mean? Retest means that price broke a particular level where you expect market return. But this time around, price broke that level and come back to respect that level as a test. Then go up and come back there and retest. So what do you come up with when price goes up and retests? You now look at other market conditions that will determine if it will buy or it will break it. So at that point, we have a term like bounce. Sorry, let me write it correctly. Bounce or break. So you expect bouncing it. So if you can term test as bouncing. So as price is coming to the red line, it bounces it to go up. So let's annotate it. It then bounces it to go up. So when it gets to this level, that there are two things involved. It either break it or bounce it. Now, when it bounces, then we are saying that this level here is now a resistance because price got there and is not able to break through. It rejects price. Then other terminologies comes in to now tell you where market is now going and what you should do to be able to know the next move of the market. Truthfully, in a simplified way, this is all about trading. Then we now give it names. Names comes in based on how it is going, the experience I have with it, the knowledge I have with it, the logic I created, and every other thing we want to find out is where is market going. So where is market going? Or price going? But before you should know where market is going, you have to know where is market coming from. So where is market coming from? It's coming from the east. So the probability is that it will go to the west or go back to the east or find its way and turn to the south, just like cardinal point. So if you don't know where you are coming from, you can never know where you are going. That is Forex. Now, when market is moving, it respects some movement it is doing in when it was coming down. So as it is going up, it has to be respecting those moves. Now, when it keeps respecting those moves, then it gives us level. It gives us channel. It gives us trend. It gives us support and resistance. Then support becomes resistance, resistance becomes support, resistance becomes support, resistance becomes support. New resistance is created, support becomes resistance, then that way. Then when it is now going to change the direction, then we also see the other side. Now, when market keeps going up, when market keep or price keeps going up, it means that it is breaking resistances. It breaks resistance, convert that resistance back to support, break the next resistance, convert that resistance back to support, break down that resistance, convert it to support, and keep going like that. Now, when it is selling, then it is breaking support, converting the support back to resistance, break the next support, convert it back to the next resistance, and keep breaking it, breaking it, breaking it. Then, with all these things, we now say market is respecting a channel or a trend. Then we will now draw the trend until a point where we now say that market has finally broken the trend, or market has finally broken the support, or market has broken the levels. Then you will now hear another term called key levels. Now, what is a level? So let's say we're giving price to what we drew here. Let me clean this. So we're giving price. So let's say this is price number 2. This is 1. This is 3. And this is 4. So currently, this is level 1, level 2, level 3, and 4. So looking at this structure, we will say price got rejected at level 3. So whatever price that is attached to level 3 is what you will mention. Now, you now say price broke level 3 and then come to 3.5, and then return back to level 3 and respect the level 3 and head towards level 4. When you get to level 4, you respect the level 4. At that point, level 4 becomes the resistance and then head towards 3. So this is a level, this is a level, this is a level, and this is a level. Now, when we are going a layer up, we are now coming to identify a key level, a major level, a major resistance, a major support. Then we are coming to look at multiple support, multiple resistances. We will now call them a zone. Now, just like when we start learning from mathematics, from crèche, 1, 2, 3, we counted that thing, and then they now give us 1 + 1 = 2, till we now get it. When we were growing, we realized that that is a level we have learned to keep adding to the level we are today. And that same 1 + 1 is now determining how much you are making in the forex market. So these are the basic information that you need now to build on. Now, some of you might say, okay, Mr. Mark, I want to learn a little more and stuff like that. Then we are now coming to reanalyze all these levels. Then we're now going to resistance, demand and supply. Then we'll get to that point where we'll start trading blocks. We'll start looking at institutional trading concepts, SMCs, that's smart money concept, and a whole lot. Right. Now, take it from here first. If you want to screenshot, please do that, because I'm going to clear it, and then we look at it from the charts. Now, what is a time frame? What is a time frame? Okay, so time frame is very simple. When we take the types of charts on the MetaTrader platform, we have just three types. We have the bar. Let me zoom out. We have the bar graph that looks like those times we've been drawing bar chart in school. Then we have the line. We have the line. We have people who use just the line to trade. It's actually my favorite. It's my favorite, yeah, because I understand what we call patterns. Then we have candlestick. This is what everybody knows. Okay. But when you come to some charting apps, like the one I'm using, we have more than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 types of charting system. And they all have different reasons. We have the baseline. That actually helps you, when the baseline is broken. Those who will go advanced, they will learn all these things. Then we have the area, which also works like the baseline, giving you a histogram data on so those who actually master this are those who understand divergence and convergence in forex trading and all those stuff. They are those who understand how the RSI moves, the MACD's relation with other stochastic and all those jargons and stuff. Those are people who will be very friendly with all this stuff. But let's just go back to the candle. Okay. Now, each candle you see here is 1 week, which means that your data analysis is based on weekly. So one candle is market open Sunday 10 p.m. to Friday 10 p.m. That's 1 week according to the forex market. So the time frame determines details of performance of price within a specific period. So we are on weekly time frame, which means that we are getting our data, projecting our data based on the weekly time frame. So when we now go to daily time frame, how many days do we have in a week? Which means that now the data analysis you are now projecting is based on daily basis. Now, all these goes into the type of trader you want to be as well. What are the types of traders we have? Commonly, we have the scalpers, we have the swing traders, we have day traders, we have position traders or investors. So, if you are a scalper and you are doing analysis on daily time frame, something might be wrong. You can project your market on daily time frame. Okay, so all these are things you need to know. So you must know the type of trader you want to be and the kind of trader you want to be. How long you want to stay in the market? Which asset are you looking at? All these guide you to even have what we call proper trading plan and proper trading layout. I have a friend who trade only Japanese or yen assets, and he trade only on Wednesdays, and he spent not less than 3 hours in the market. He's down for the whole week, and he still makes his money. Because after that, he will now go back to the market from that Wednesday, Thursday, Friday, Saturday, Monday, Tuesday. He takes his time to analyze the market structure and be able to know the next move of the market. He captures it and he goes. We have sessions in the market. Some people only trade the Asian sessions. Some people trade the London sessions. Some people trade the New York sessions. That's the reversal. What actually happened there? We're going to look at all this stuff. So all these now have the session on a time frame. Now, if you are trading by session and you are now on daily time frame, everything will be swallowed. So as a session trader, you have to be probably on 1 hour time frame, probably. Yes, 1 hour time frame. Each candle is 1 hour. The question is, what happened to this candle? It looks very long. This is a fundamental or a news. So if you are going to trade and you are a technical analysis trader, you must always look at the fundamental. But if you are a fundamental analysis trader, you don't have any problem with technical analysis. And fundamental analysis actually sometimes make technical traders like you don't know how to analyze the market, but that is not the truth. So this person would have analyzed the market going up, expecting a take profit somewhere here, but all of a sudden, mess up. Okay, so there is a session that runs through here. Please do not unmute yourself, please, please, please. There's a session that runs through here because you're on the 1 hour time frame. You'll be looking for sell opportunities. Confirmation here, confirmation here, confirmation here. But on the daily time frame, you may not be able to see a sell opportunity. Now let's go back to the daily time frame. Look at the structure first. Now let's go back to daily, 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 daily. All right. So if you're already a day trader, you are already in this sell since last week. So you'll get your confirmation here and get your entry on this particular candle, the third candle. So you'll be in profit. Whatever is happening, you don't care. Now, there are reasons why you have to look at the bigger time frame. Make your decision in that. The smaller time frame have too many noise. Too many noise. Look at the whole chart. Somebody who is trading on the 1 minute time frame have so many sales opportunities. I'm not saying it's bad, but the bigger time frame helps you to get your projections. So what I do is that when I go to the bigger time frame, before I start trading, I go to the bigger time frame. I get something we call high of the day and low of the day, or high of a period and low of a period. Then I now use that high of a period and low of a period to give me my main support and resistance. Then when I drop to the smaller time frames, I will still get high of the day or high of a period, low of a period on that particular time frame. So if I spot it on the daily time frame, then I go to the 4 hour time frame, I spot it again. And I go to the 1 hour time frame, I spot it again. Then that now gives me my levels. Then along the line, we're going to look at what we call MTFA, multiple time frame analysis. There are sometimes people do analysis on, for instance, yesterday I was taking a trade. It's a friend that gave me the signal, and I was like, he made the analysis on the 1 hour time frame. But when you look at the structure, the 1 hour time frame was not respecting the market at that time. It was the 15-minute time frame. So instead of selling, I bought. And then I was able to analyze his stop loss would be hit, which we call it hand. Because at that time, market's supposed to sell. But when you go into multiple time frame analysis, you realize that there are some divergence created and convergence that must be respected before the real sell move. So if you do your analysis on the 1 hour time frame and you didn't step down, you didn't also step up, you might get the entry right and then make small profits. The market will return all of a sudden against you. Then you start blaming your broker. Okay, so write it in the corner of your notebook, MTFA, multiple time frame analysis. Start researching on it and then be able to understand well. Now, when ICX gives signal, let me look at Euro GBP. Let's look at something there quickly. They gave 30 minutes. Okay. So let's look at it. Euro EUR GBP. Okay, so Euro GBP. Let me use Wanda to analyze it. Okay, so 30-minute time frame. The reason why they give you the time frame is you should be able to back test the signal. Okay, so now what signal did they give you? 1 hour ago, they gave a sell signal. Before then, it was a buy signal. Okay, now let's see. What I do is that When a signal is given, so the first was a buy, the second was a sell. Okay, now this is 30 minutes, 30 minutes, which is 1 hour, then 30 minutes. So this particular candle sold. This particular candle sold to this level and buy, and the previous candle sell. So this is a winning trade. Okay. Now we have to look at the time frame. Now before then, let's assume we are analyzing on the bigger time, a smaller time frame now. So we have a resistance here. 1, 2, 3. That's a major resistance. Okay. Now, before then, we have a low here. Have a low there, which is break of structure. Okay. So those who are going to trade what we call fake out, they'll make their money. And then those who are going to trade breakout, they have to wait for price to return to the third blue line, the fourth blue line here, and expect selling. All right. Now what we have to do quickly is this. Let's go to 15-minute time frame and see something. The reason why you had a sell and a buy and it worked. On the 15-minute time frame, it is clearer. Let's go to 5-minute time frame. It will become more clear. So on the 5-minute time frame, the structure was broken and we added this level. Now, why do I add this level? This, when I spot it on the bigger time frame, on the 30-minute time frame, those are wicks as support. But when you now come to the 5-minute time frame, you will see that there is a wick below that gives all these places become a zone, which was a support zone, broken, tested. So the sell is valid and the buy too is valid. Now, when you have this basic knowledge, when the signal is given, you can say, I'm supposed to use, I want to use 0.01. But with this analysis, let me use 0.05. Maybe ICX gave it 2 star, but you will reanalyze you're like, no, let's give it 4 star or 3 star. Okay, so those are a few things that you need to know, have an idea on. All right, so let me zoom out quickly and you see something. We are still looking at this trade. Now, when you look at this trade, realize that it's a downtrend. Okay, let me spot something quickly here. You take this and connect through like this. It's a downtrend. Okay, so markets or prices dropping, creating what we call lower lows, which we are going to look at when we get into technical analysis. It's creating lows. Okay. Those who are going to advanced level, we are going to add another line called control line that actually make or revalidate the downtrend or the trend the market is going. So trend up is uptrend, which means the market is buying, creating higher highs and lower highs. Trend market is selling, is creating lower lows and higher lows. So let me draw that structure again, just for you to have a look at it. So price is going up. Okay. Then price is going down. So this is a downtrend. This is a downtrend, and this is an uptrend. Now, what does they mean? Yes, this one market is going up. So this is low, and then this is high. And then market will now create what we call lower high. That means price did not come lower than the previous low. So once you see things going like that, it tells you that market will keep going up until a change in direction comes. Now, at this point, this is high, then it creates low, and then this high is lower than this high, so it's higher low, HL. But this low, this particular low is lower than this low, so it's lower low. This high is still lower than this high, so it's still higher low. This is still lower low until a change in direction. So this is a downtrend, and this is an uptrend. Now, when price is moving, we have two lines for it. We have a line connecting the down and line connecting the up. So comparing the two give us the trend. And the ability of price moving within the upper line and the lower line gives us the channel, just like a gutter. So we will hear some things along the line that market is respecting the channel. Market is respecting the channel, which means that as it is going higher high, lower low, higher high, all those words, it is respecting a gap or a path. Market is respecting that path. So we say it's respecting the channel, which is giving either an uptrend or a downtrend. That is how trend and channel came about. That's how trend and channel came about. So on this note, I'll end it here and we take questions. Thank you for your time.